Hello everyone. Welcome to the Stock Minds web channel. Zeta Global Holdings Corp., NYSE, Zeta, a leading AI-driven marketing technology company, has demonstrated robust growth in Q1 2025, positioning itself as an attractive investment opportunity. With significant revenue increases, improved profitability metrics, and a compelling valuation, Zeta Global is poised for continued success in the dynamic marketing technology landscape. In this video, we will dive into Zeta Global recent earnings, stock performance, growth potential, and the risks investors should consider. About Zeta Global. Founded in 2007 by David A. Steinberg and former Apple CEO John Sculley, Zeta Global is headquartered in New York City. The company specializes in providing enterprises with consumer intelligence and marketing automation software through its Zeta Marketing Platform, ZMP. This omni-channel platform leverages big data and machine learning to deliver personalized marketing across various channels, including email, social media, web, and connected TV. Zeta Global Financial Performance. In Q1 2025, Zeta Global reported revenue of $264.42 million, marking a 35.64% increase compared to $194.95 million in Q1 2024. The company's earnings per share, EPS, improved to -10 cents from -23 cents in the same period last year, reflecting a 56.52% reduction in losses. On a trailing 12 months TTM basis, revenue reached $1.07 billion, up 40.36% from $766.07 million in Q1 2024. TTM EPS improved to -27 cents from -$1.05, a 74.29% reduction in losses. Free cash flow per share increased to 62 cents from 46 cents, representing a 34.78% growth. The company's gross profit margin stood at 60.37%, with a net profit margin of -4.82%. EBITDA margin was 0.09%, and free cash flow, FCF margin was 11.29%. Zeta maintained a healthy debt-to-equity ratio of 0.31, indicating prudent financial management. Over the past 5 years, Zeta Global's revenue has been growing steadily at a 28.7% CAGR. Net income loss has steadily decreased and may turn positive this year, and free cash flow has been growing steadily at a 35.6% CAGR. Zeta Global 2025 Financial Forecast. Analysts forecast revenue of $1.24 billion for 2025, a 23.37% increase from 2024's $1 billion. Non-GAAP EPS is projected at 70 cents, a 7.3% rise from 65 cents in 2024. The consensus analyst price target is $30.08 with a strong buy rating, suggesting a great potential upside of 120.04%. Zeta stock price performance and valuation. At the time of making this video, Zeta Global's stock price is $13.68 per share. Over the past year, the stock has experienced an 8.4% increase, underperforming the S&P 500's 12.2% gain. However, since its IPO in June 2021, Zeta's stock has appreciated by 65.4%, outperforming the S&P 500's 33.5% rise during the same period. In terms of valuation, Zeta's price-to-sales PS ratio stands at 3, with a forward PS of 2.6. The non-GAAP price-to-earnings PE/TTM ratio is 20.98, and the forward PE is 19.61. The price-to-free cash flow PFCF/TTM ratio is 26.56. If we look at Zeta's valuation over the past few years, its forward PS is below the average of 3.08, and its forward PFCF is also below the average of 36.78, while the business continues to grow rapidly. These metrics indicate that Zeta is trading at undervaluation, especially considering its strong growth prospects. Zeta Global Growth Potential. Zeta Global's growth trajectory is supported by several factors. 1. Strong revenue and customer growth momentum. Zeta Global Holdings has demonstrated impressive customer expansion and retention, key drivers of its growth in 2025. The number of scaled customers rose 19% year-over-year to 548, while the count of super-scaled customers reached 159, up 10%. Importantly, average revenue per user increased by 12% for scaled customers and an impressive 23% for super-scaled customers. These metrics demonstrate Zeta's ability to both expand its customer base and deepen existing relationships, fueling a recurring revenue engine that is well-positioned for continued growth. 2. AI-powered innovation driving differentiation. Zeta is investing in artificial intelligence, which is rapidly becoming a major growth lever. The launch of its AI Agent Studio and continued enhancements to its AI-driven marketing platform have enabled the company to deliver measurable ROI to enterprise clients. These capabilities support marketers in achieving more efficient, targeted, and attributable outcomes across channels, critical in a market where performance and accountability are top priorities. Zeta's management emphasized that clients adopting these tools have seen direct revenue benefits, underlining the technology's real-world impact. As more businesses seek to integrate advanced AI into their marketing workflows, Zeta is poised to be a top choice for performance-focused organizations. 3. Expanding market reach through strategic partnerships. Zeta is significantly broadening its market footprint through new and expanded partnerships. In Q1, the company added 2 new independent agencies to its platform, with 2 more in the pipeline. This is a strategic move aimed at tapping into a large ecosystem of over 1,000 agency prospects. These agency partnerships are mutually beneficial. Agencies leverage Zeta's audience intelligence and attribution capabilities to win business, while Zeta gains a scalable channel for revenue growth. Adoption by major agency holding companies and increasing traction across multiple verticals, 6 of the top 10 verticals grew more than 20%, highlight Zeta's growing relevance across the marketing landscape. These relationships not only extend Zeta's reach, but also lock in long-term revenue streams. 4. Durable and resilient business model. Zeta benefits from a resilient revenue model grounded in long-term customer relationships and performance-based marketing spend. Over 90% of revenue comes from customers that have been with the company for over a year, and net revenue retention has consistently remained above 111% since the IPO. This indicates a high level of customer satisfaction and successful upselling. Furthermore, the bulk of Zeta's business supports lower funnel, ROI-focused marketing effort spending that tends to remain stable even during economic downturns. Serving large enterprises with more predictable budgets, Zeta has shown it can thrive regardless of the broader economic environment, making its business model both scalable and resilient. Risks to consider. While Zeta Global presents a compelling investment opportunity, potential investors should be aware of certain risks. 1. Dependence on enterprise marketing budgets. Zeta primarily serves large enterprise clients with significant marketing budgets. While this segment offers stability and high revenue potential, it also exposes the company to macroeconomic risks. In the event of a slowdown or recession, marketing budgets, even for performance-driven campaigns, can face cuts. Although Zeta's lower funnel, ROI-focused offerings are relatively resilient, prolonged economic stress could still reduce client spending and impact revenue growth. 2. Competitive landscape and pricing pressure. The digital marketing and customer data platform (CDP) space is highly competitive, with major players like Salesforce, Adobe, and Oracle, along with emerging AI-native startups. Zeta must continually innovate to differentiate its offerings. While its AI capabilities are currently a strength, rapid tech advancement means rivals could close the gap. This competition could lead to pricing pressure, increased customer acquisition costs, and reduced margins over time. 3. Customer concentration risk. Zeta relies heavily on its scaled and super-scaled customer segments for the majority of its revenue. While this demonstrates strong customer relationships, it also introduces concentration risk. If a few large clients reduce their spending or exit the platform, it could materially affect the company's financials. Maintaining high net revenue retention, currently at 111%, is crucial to offset this vulnerability. 4. Technology and data privacy regulation. As a data-driven marketing platform, Zeta operates in a sector increasingly shaped by privacy laws and data regulations such as General Data Protection Regulation (GDPR), California Consumer Privacy Act (CCPA), and evolving U.S. state laws. Compliance is complex and costly, and any misstep, intentional or accidental, could result in regulatory penalties, loss of client trust, or restrictions on data usage that affect Zeta's core targeting and analytics capabilities. Despite these risks, Zeta's strong financial performance, strategic initiatives, and low valuation, making it a resilient investment choice. Conclusion: Zeta Global's impressive Q1 2025 results underscore its robust growth and operational efficiency. With a solid financial foundation, strategic partnerships, and a focus on innovation, Zeta is well-positioned to capitalize on the growing demand for AI-driven marketing solutions. The company's reasonable valuation and strong analyst endorsements further enhance its investment appeal. Investors seeking exposure to the dynamic marketing technology sector should consider Zeta Global as a promising addition to their portfolios. But remember, this is not a financial advice. What do you think about Zeta Global? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.